What's going on, everybody? JT here with the Next Block, and today we're going to be doing some technical analysis on 5 different cryptocurrencies. We're going to be doing technical analysis on Algorand, XRP, HBAR, Bitcoin, and Ethereum. If you enjoy these technical analysis videos, smash that thumbs up button and subscribe to the channel. Of course, for those of us that have been sticking around, this bear market has been absolutely brutal, but we're hoping on this channel that we can help guide our way through the bear market and into the bull market. So firstly, to start things off, we're going to begin by talking about Bitcoin, because of course, you can't talk about the crypto market, you can't look at charts without seeing what Bitcoin's up to. Bitcoin is the largest player in the game, it has the most liquidity, and what Bitcoin does, the rest of the market follows. So we're going to take a look at Bitcoin, then we're going to go to Ethereum, then Algorand, then XRP, ending with HBAR. So stick around to the end of this video, and there will be timestamps down below if you enjoy a certain crypto over another and only want to see that technical analysis. But we appreciate everyone that watches to the end of these videos, and without further ado, let's take a look at some Bitcoin. Alright, so here we have Bitcoin on the weekly time frame. A lot of you might be asking, what are all these things on the screen? So first, of course, we have the price. The price is the green and red bars. That is very obvious. Then we have these vertical lines, and then we have these 2 indicators down at the bottom. This middle indicator is the RSI, the relative strength index, and the bottom indicator is the MACD, the moving average convergence divergence. Both of these indicators help to spot potential trend reversals. These other lines in this chart, we've got a reddish blue line here, we've got a blue line above it, and we've got a green line. These are moving averages. So these take the average price over extended periods of time. Currently, these are set to 50, 100, and 200, and we are on the weekly time frame. So this means the green is 50 weeks, the blue is 100 weeks, and this reddish one is 200 weeks. These are the average moving prices over those time frames. Now you might be asking yourself, what do these vertical lines represent? So let me tell you. These white vertical lines represent the Bitcoin halving, which happens about every 4 years, and this purple line represents where we are in the cycle in the lead up to the halving. So that we're about 259 or so days before the halving, give or take, and that's what this purple line represents here, 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 and here. So this is all 259 days, give or take, before the halving. I like to do this because it gives a little bit of a representation of what we could be expecting. As you can see here, this first halving, buying 259 days before the halving, was a great decision. You made out about 2.5x before the halving even commenced. Same thing with the halving in 2016, another about 2.5x before the halving even commenced if you bought 259 days before the halving. 2020, however, if you bought 259 days before the halving, you would have seen your Bitcoin go down by about 70% in value before finally taking off into that bull run that eclipsed at about $69,000 over the past 2 years. Now, personally, I think this cycle is going to look a lot more like the previous cycle where we had this about 70% drop before the halving. This drop was exaggerated by the COVID crisis, so I don't think we're going to see a 70% drop, but I do think we're going to retest or come close to retesting these lows of about $15,000, $16,000. So maybe we'll see about $16,000 to $18,000 Bitcoin. However, I do want to make a mention of the fact that if you look at the relative strength index on the weekly time scale right here, I just highlighted it and changed it green. It might be a little bit difficult to see, but if you can see right here, every time it entered this green zone, it entered it back in 2011 in November. That was probably the best price to buy Bitcoin. The second time it entered this green zone was in about 2015, January 2015, which was the best time to buy following the cycle top in 2013. The next time it entered this green zone on the RSI for the weekly RSI was in November of 2018, the exact Bitcoin bottom. Now, the last time it entered this zone was in June of 2022, as well as November 2022. June looked like the lows, but then November, sure enough, was the most recent low. So will history repeat itself? Will this green box represent the low for Bitcoin? Have we already seen the bottom? Personally, I think so. I think we've seen the bottom, and I think we're going to come to retest close to the bottom, similar as we did in the previous cycle, but not a full complete retest of the bottom. So let's zoom in to the weekly, take a look at it a little deeper, look at the daily, look at the 4-hour chart, and then we'll move on to Ethereum, we'll move on to Algorand, we'll move on to XRP, and we'll finish off with HBAR. Now, real quick, one of the things that people have noticed is that the 50-week moving average is kind of acting like a bull market support band. So when we're above it, the bull market is on. When we're below it, the bear market is on. If you go back all the way to the beginning, you can see this clear as day. So we are above this green 50-week moving average. We broke the 50-week moving average in August of 2014, and then it was a bear market all the way until October of 2015, when we crossed it back to the upside. October, November 2015, we got back above the 50-week moving average, the bull market support band, and we went for quite a while. We didn't break this bull market support band until May of 2018, which marked the beginning of the bear market. We didn't cross back above this 50-week moving average, the bull market support band, until May 2019. We retested the bull market support band in late 2019, looked like everything was okay, and then the COVID crash pushed us back down. I think this is a little bit of an exaggeration because of the COVID crisis. If this didn't happen, I don't think we would have fallen below the bull market support band, but it didn't take long before we were back above it in May of 2020, where we saw an incredible bull run all the way back above $69,000. We broke this bull market support band in January of 2022, and we have been below it until March of 2023. March of this year is when we finally got above this bull market support band. So currently, by historical data, we are in the Bitcoin bull market. We're in the very early beginning stages of the Bitcoin bull market, but it's still super early. And of course, as I mentioned before, I think prices are going to come back down. I think we're going to retest these lows, or if anything, at least bounce back off this bull market support band, which currently sits at $23,500. One of the things I like to do is add horizontal lines where the moving averages are. And now it makes it much easier to see support and resistance levels. So you can see the 50-week moving average right here is going to be a nice support around $23,600. We've got the 200-week moving average that sits at another nice support at around $27,300. We have the 100-week moving average that's going to act as resistance. It'll be a little tough to get through. We almost tried to get through it back in July of 2023, basically bouncing right off of it. That resistance currently sits at about $31,394. If we get above that resistance, I think we are off to the races. If we fall below these two supports, we're going to go back towards the lows. We're going to retest these lows likely around 17.5 all the way down to about 15.5. So certainly something to watch out for, but until then, we are still seeing higher lows. We're on a great, we've got higher lows happening here and higher highs happening here. So everything points to currently still bullish structure. So I'm hoping that these two supports hold, but let's dive a little deeper into this. Now, when you zoom into it on the daily, you can see here back in February of 2023, Bitcoin had a golden cross. This usually symbolizes the beginning of a bull market. A lot of the times, however, these signals can be a little bit fuzzy. So sometimes you might get a false positive. You might get a golden cross. However, it could be a fake out. So far, this one has not been. We've seen higher lows. We've seen higher highs. It's a perfect setup for a continuous bull market extension. And if we look at this MACD, it is in a zone that is oversold. So usually when these indicators reach a level that's low enough, it's typically what is called oversold. And when they're too high, it's typically overbought. When things are oversold, usually it could mean some good pricing. And the MACD, a lot of the times when there's reversals on the MACD, you can see that by these crosses. So I'm going to zoom into the MACD right here. You can see this cross. These two lines cross. The blue was below the orange, and then the blue went above the orange. This marked a trend reversal, and prices started going back up. When this cross right here happened and the blue went back below the orange, it marked another trend reversal and prices began to fall. This basically continues to happen throughout the price action. And we've just seen the blue cross back above the red, but it looks weak. It looks like it could very easily fold back over, just like it did here. It went above, folded back over, came back down. Now let's take a look at the price and see what happened in those time periods. Price went up from 26,000 to 28,000, rolled back over, came down to 25,000, and then that marked the bottom for that leg, and we moved back on up to about $32,000. This looks like what's happening here. We're going to have a little tiny lip up like we do right here. We have this little lip. We have this little lip up right here, and then we're going to roll back over, likely come back down, test this green support, and then go and continue to put on new highs. As long as we continue to put in higher lows than previously, and the previous low was about $24,700, as long as our next low is above that, that is still good structure for a bull market. If you zoom into the 4-hour of Bitcoin, you can see that Bitcoin's trying really hard to use the 50 and 100 moving averages for the 4-hour time frame as support. If it's able to successfully use this zone as support, get past this previous zone of resistance, which would be about the 200 MA in red here, then I could see us retesting this local high of around $31,400. All right, now if we look at Ethereum on the weekly level, if we go all the way back to over here and use this peak back in 2015, connect it with the bottom in 2016 and the bottom in 2020, you get this very great trend line here in green. Now let's zoom in to present day. Now, as we can see here, Ethereum was in a bear market from November 2021 until arguably January of 2023. It crossed this bear market trend line in about February 2023 and have broken out to the upside since. However, it does look like we're on our way back down. We also have never retested this green support since the last bear market. So the last time we retested this green support was back in March of 2020. There's very large probability that we still come down and retest this green line, which would be pretty picture perfect because if you zoom in right here, currently the 200-week moving average and the 50-week moving average are all pretty much right on this line. We could see Ethereum very, very likely doing one of these and having some sort of movement like this, where it comes down, retests these moving averages, both the 50 and the 200-week moving average, retests this multi-year support band, and then travels back up. So there is a large possibility Ethereum comes back down to around 16,000 to 1616 over the course of the next month or so. So sometime between maybe now and early September, we could see this drop down from about 1850, where it's at right now, to about 16,000, which would represent a drop of roughly 13% over the next 3 to 4 weeks. Now again, as with Bitcoin, these moving averages represent supports and resistance. So you have this 100-week moving average right here that would be resistance. It is the next line of resistance that Ethereum has, and that's at about $2,214 currently. Ethereum has, again, very strong support around the $1,600 or $1,600 mark. That should represent very strong support and mark the next leg towards further moves upward. However, if Ethereum loses this $1,600 or $1,600 mark, not only would it represent the first time since November 2022 that Ethereum puts in a lower low, but it would also lose this multi-year support line, which wouldn't be good. If we lose this multi-year support line and we start making lower lows, it could be a pretty disastrous rest of the year for Ethereum. So we'll definitely wait and see. We have no reason to think that that's what's going to happen. These support lines should hold. There's no, catalysts that I'm aware of that are going to be such a negative catalyst to the downside, but that's what we're looking at currently. All right, so let's take a look at Algorand. Algorand, very, very interesting. I think there's a huge possibility that everyone's sleeping on Algorand for the next bull market. I mean, just look at the range it's been in. Of course, it had this peak when it first hit the market. Of course, they sold it at way too high of a price and at a very bad time in the market. So this was still when the markets were coming down, and Algorand did themselves a disservice by launching at this time at such a high price. But regardless, we came down, we started this range from up here all the way down to about the 9-cent range. We went all the way back up in 2021 and basically hit the peak, this peak range that we started here, and came back down to about the 9-cent range. In my opinion, there's no reason to believe that in the next bull market, we will not continue to at least range in this area, if not break beyond it. So I'm predicting an easy next bull market getting to the top of this range. I personally think we'll break out of this range, but I don't want to make such strong predictions, but I do believe we're going to get to the top of this range. Now, if you look at this falling wedge, in my opinion, this argues a huge possibility that Algorand is going to pop out. Now, if we look at the RSI relative to the price, this blue line here is the RSI itself. This pink line here is an RSI-based moving average. When the RSI is above this moving average, we are in a bull market. As soon as this moving average and the RSI crossed, it represents a reversal. So let's put vertical lines at every cross and see if we can see a pattern. All right, so I really hope this makes things a little bit clearer, at least for what I'm looking at, but let's take a look. We had a cross to the bearish side on the RSI back in September 2020, and Algorand fell from 48 cents all the way to as low as 22 cents. We had a bullish cross on the RSI right here in November 2020, and Algorand went from about 27 cents all the way to a high of about $1.60. Then we had a bearish cross on the RSI when Algorand was at about $1.70, and it fell to as low as 69 cents before having another bullish cross right here, and you can see this pattern emerging. It was almost picture perfect. There is a little bit of a fake out, so we have a little bit down here. So if you had bought in July 2022, by the time the next cross happened, you basically would have been even money. So you wouldn't have made out here. But look at this. If you had bought at this bullish cross right here and sold at this bearish cross right here, these 2 points, it wouldn't have been the exact bottoms or the exact tops, but you would have been able to make at least 425%. If you had done the same thing in this bull cross in the RSI in August 2021 until the bear cross in the RSI in November 2021, you could have made roughly, depending on, let's use the body because there's a big wick right here. So you might have been able to get out in the top of the wick, but let's just use the body. That's still a 143% increase on just the body. Some of these people could have got out in the wick, no problem. If you got out in 2021 after this bear cross, you would have saved yourself from almost $3 down to 9 cents, basically. If you had bought back in at this bull cross right here in July 2022, by the time the bear cross happened, you would have been, give or take, this same amount of money, plus or minus 5%, depending on exactly when you pulled the trigger. If you had bought at this most recent bull cross in January 2023, you could have made about 23% before the next bear cross in April 2023. Well, my friends, look what we have here. We have yet another cross. So what do you think is going to happen? Personally, I think everyone's sleeping on Algorand, and there is time to shine for this one. That said, if Algorand can get above 22 cents and then 59 to 61 cents, we could see it going back towards $1, $2, $3, and beyond. Those are the two biggest points of resistance in Algorand's path there, however. And much like Bitcoin and Ethereum, this 50-week moving average certainly represents a bull market support band. We've been below this 50-week moving average since January of 2022. If you had sold the day that we had gone below that 50-week moving average, you would have been able to get out at about $1.30 to, depending on how long you waited, maybe $1.15. But you can see throughout the history, we would come back down, we would land on this bull market support band, tested on support here. We tested it as support here in 2021 when we broke it in early 2022. We are still below it. So don't get me wrong, we could still very much so travel in this descending wedge. We could travel down this channel for quite some time. I mean, if we take this to its logical conclusion, if we're being real, Algorand could travel down in this tight zone and basically travel all the way down to like 4 or 5 cents before it finally pops off. That's totally possible as well. So don't just think this video is like, oh, go buy Algorand, because although I do think time is on our side and 8, 9, 10, 11, 12 cents for Algorand is a perfect entry point, you could see a 4, 5, 6 cent Algorand in the future. That is without a doubt totally plausible. It's totally within the realm of this descending wedge. And in my opinion, it's like a rubber band. You're just pulling it down, and you're just exaggerating the reaction that's going to happen from it. So pick your poison for sure, but I think Algorand's one to keep your eye on. Now here we have XRP on the weekly time zone. I think XRP is going to continue to travel within this range. So we can see the top that it had in 2018, the top that it had in 2021, and in my opinion, sometime in 2023, it's going to peak again and hit this red line probably, probably around $1.20 or something like that, come back down, retest this green support line before eventually breaking out to the upside with the rest of the market entering 2024 to 2025. Everybody that watches this channel and knows me knows that I've been predicting that the next cycle top won't be until somewhere in mid to late 2025, if not even later. Now, what I just drew here is a rough sketch of my idea of what I think XRP could do, and I think it's going to range from as low as about 48 cents to as high as about $1.17, $1.20 until the lead up into 2024, 2025 when the bull market commences. You can even see it here on the RSI. So right here, the RSI was very overbought in 2017. Looked like the peak. If you sold right here, based on technicals, I wouldn't have blamed you, but we came back and we did another high in 2017. However, the RSI didn't reach a higher point than it did in 2017. So what happens here when price makes a higher high, but the indicator doesn't make a higher high, this means it's weakening. This is usually when you want to sell. You usually want to sell when the price makes a higher high, but the indicator does not make a higher high. You can see the same thing play out here in 2021. In 2021, the RSI peaked in November 2020, and that looked like the peak for our XRP at around 78 cents. But then, a couple months later, April 2021, XRP truly peaked at about $1.98. However, the RSI did not peak. It made a lower high than the previous peak. This means the run was weakening. This was when you wanted to sell, right here. Now, we've reached this overbought level in July 2023, but I think the very same thing could happen. We're going to see XRP make a new high, likely to this about $1.19 zone, and the RSI will not make a new high. This is when you'll want to sell, exit, and wait to re-enter your position. Ideally, when XRP's weekly RSI is down below 30 or 29 or close to. The next levels of support for XRP are 57 cents, 51 cents, and 45 cents. So those are the levels I'd be watching. I do think things are coming back down a little bit to retest their supports. Those are the levels I'd be watching. If you think we're entering a new bull market, those are the levels I would be eyeing to start adding a little bit back into my position if XRP is something that you want to be adding to. Now, as I zoom into the daily on this, I see something really, really interesting in the RSI that might counteract something I just said by looking at the weekly. So I said I think XRP might come down to test some of those supports that I just mentioned. Totally could. I still think that's a large possibility. But when you look at the RSI, it does kind of look like we're reaching that point where we're going to move back up. So we see we're above this moving average on the RSI, and then we're below it, things come back down. Then we're above it, things go back up. Then we're below it, things come back down. We're above it, below it, above it, below it, and it looks like we're about to move back above it. It really does look like on the daily, XRP is gearing up to have another move to the upside. Now, whether we break the previous upside, which was about 94 cents, the psychological dollar mark, or not, is yet to be seen. I think we could very much so retest the recent local highs between 85 cents and $1, or 95 cents rather. I think both things are possible though. I think there's a large possibility before that happens, you see a quick wick down to about 45, 50 cents for XRP, retest those supports, and then break out to try to retest those resistances. It's going to be a battle of support and resistance until we get some more liquidity in the market. It is a Sunday and DXY is currently not trading. By the time this video goes live, DXY, or the dollar rather, likely will be trading, so you'll be able to make a little bit more assumptions on what's going to happen in the market, especially with the stock markets opening back up tomorrow. It'll be really interesting to see where the markets go from here. Let's take a look at HBAR and wrap ourselves up. If you look at HBAR, actually, the price action looks really similar to what we were just looking at XRP. Like, it didn't even look like the charts changed when I entered these charts. Let's zoom out to the weekly real quick. So looking at the weekly chart, this actually looks really, really good, honestly. If we're being real, this looks really, really good. I'm going to do what I did with Algorand real quick and put those vertical buy and sell lines based on the RSI crossovers, because I think it really does highlight a lot of great moves. All right, so here we have it. Back in 2020, when the RSI fell below the moving average, you could see the price go straight down. It's pretty clear. When this cross happened to the bull side, we saw HBAR go from about 3 cents all the way up to about 42.50 cents. The next bear cross in the RSI happened on about April 2021 when HBAR was between 35-45 cents. You would be able to ride that all the way down to the next bull cross, which happened at about 17 cents. Just look at this. Basically, the only time that this was wrong was right here back in March and April of 2022. So we had this bullish cross right here, and it was a little fake out. You just got this little green candle and it went right back down. Realistically, if you had bought and sold at those levels when the cross happened, you would have basically made like 4%. So really, was it wrong? It wasn't. It wasn't necessarily wrong. It just wasn't a big run. Like this from here to here, you could have made 944%. From here to here, you could have made 113%. From here to here, this was actually the only time it was roughly wrong. Depending on when you got in and out, you might have lost about 7%. Outside of that, here to here, from January 2023 to April 2023, you would have made about 78-80%. Now, the most recent bullish cross on this RSI was back in July. So what's going to happen? We're going to see another 80%. We're going to see 80% would bring it back to about 9 cents. Right now, it's at almost 6 cents. Are we going to see it do another 100-ish%? I mean, that would bring it to over 10 cents. Where are we going to see HBAR go? In my opinion, just buying off of these crosses alone and ignoring all of the other noise has actually proven to be the most successful trading strategy I've found so far. Now, where's HBAR going to go? Who knows? I mean, we could take a look and we see that it has a lot of resistance. It's trying to get above its bull market support band right here. This 50-week moving average is at about 0.57 cents, and the price is at about 0.58 cents. So it's trying to get above this bull market support band. The next bit of resistance is the 200-week moving average at about 12 cents and the 100-week moving average at about 13.5 cents. Those are the next big points of resistance. I do think HBAR will be reaching those marks over the next couple of weeks. We'll see where it goes from there, but that essentially wraps up our video on technical analysis. I just wanted to do a high-level overview of some of the things I'm seeing on these crypto charts. If you liked it, smash that thumbs up button, hit the subscribe button, and hit me up down in the comments below with how you think I can improve these technical analysis videos. We're going to be coming out with them every single Monday. We'll be looking at a handful of different coins. Let me know what kind of coins you want me to look at, whether it's Bitcoin, Ethereum, Shiba Inu, Pepe, whatever coin you want me to look at. Whichever ones get the most votes down in the comments, we will be doing. And if you liked this format, let me know. If you think I should do a deeper dive in maybe just 1 or 2 cryptos rather than 5 to get a more holistic picture, let me know your thoughts. I'm down to hear them. This is just the first iteration of the technical analysis videos. We'd love to hear your thoughts on ways to improve them. If you have them, hit us up in the comments below. Hopefully we'll catch you in the next videos. We've got some great guests coming on our live shows. We've got Anthony Scaramucci. We've got Stacy Warden. We've got Mark Yesko. We're reaching out to all sorts of ecosystems across the blockchain space. So be sure to hit that subscribe button. Be sure to hit that notification bell, and we'll catch you in the next video. Thanks.